Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. I'm Ethan Feller, stock strategist here at Zacks Investment Research, and welcome to this week's edition of Top Stock Picks of the Week. My colleague who was supposed to join me today had his power knocked out by a snowstorm, so I'll be sharing both picks for this week. For my first pick, I'll be looking at Plains All-American Pipeline with the ticker symbol PAA. Plains is an MLP that owns and operates midstream energy infrastructure, primarily focused on the transportation and storage of crude oil and natural gas. With the massive network of pipelines and terminals, Plains plays a vital role in getting energy from producers to the market. So let's jump into the data and see why this stock might be worth a closer look for you. I'm sharing Plains All-American today for a few reasons. One, it's just a compelling company, but I've turned decidedly concerned about the broad market here. And I see that we're bouncing today in the market, but I'm not feeling so confident that the sell-off is over. Of course, I could be wrong. Investors should always take a diversified approach to their portfolios. But now I'm focused on adding defensive names in this current market regime. And one sector that's clearly standing out in this environment and that is showing a lot of relative strength is energy. It remains the best performing sector in the market. And especially impressive is that the price of oil is still below $70. So to me, it appears that investors are rotating into the energy sector. Energy stocks are fairly valued at the current levels, and a lot of them are really gushing cash and have robust balance sheets. So yeah, that's why I'm taking a look at it. In this chart, you can see the relative performance of some of the sectors. And yeah, so here in blue, we have the S&P 500, which is down 1.8% year to date. And then at the top, you can see we have energy, which is up 7.4% so far this year. It's even outperforming some other defensive sectors, like we got XLV. This is healthcare here, which is up just under 7%. Utilities are also having a pretty good year, still outperforming the market 2.7%. And you can see that you got in purple here, we have the technology sector, which is down 6% year to date. So yeah, energy is just showing strong relative strength. It's pretty quiet. I really haven't seen a lot of commentary on it. And I think a lot of energy names are looking appealing. Obviously, the super majors look pretty good, like Chevron and Exxon, but they don't have top stacks ranks. So we're taking a look at this one today. So Plains All-American, you can see it has a Zacks rank 1. It has good style scores as well, A's and B's across the board. And you can see it's in the top of the industry rank as well, the top 5%, number 12 out of 247 industries. So yeah, it has a lot going for it. Over the last 5 years, as you can see, the chart has, really grinded higher with pretty low volatility. You can see it's a pretty large company. It's $14 billion market cap. They pay a hefty dividend of 7.6%, which is always nice to get some income while you hold a stock. And yeah, we can see it has a forward earnings multiple of 13 times, which is fairly reasonable. There's not a whole lot of growth forecasted in the earnings or sales, which we'll take a look at in a second. But the defensive nature of energy at this point, I think, is a big factor in why these stocks are doing well. In 2022, if you'll remember, the market sold off pretty aggressively. It was a legitimate bear market. But oil stocks held up really well, and investors who owned energy stocks, outperformed that year. And while the broad market was down about 20%, energy stocks had a very good year. Here we can see the analysts' revisions. You can see that Plains has nearly unanimous upgrades, just one downgrade for next year's earnings estimates. Current quarter earnings over the last 2 months have increased by almost 5%. Next quarter earnings have increased by almost 7%. This year's earnings have increased by over 10%, and next year's are up by 2.7%. So yeah, it just generally has a lot going for it. Take a quick look at the balance sheet, which I think is also compelling. We can see that Plains has total assets of $26 billion and total liabilities of $13 billion. So yeah, they got net assets of $13 billion, which is a good place to be. And, as I said, a lot of these energy companies are really gushing cash flow. So you can see this is on the income statements. We have a little chart you can get here on the Zacks page. And if we look at free cash flow, the trailing 12 months, this is in millions. So it's 1.8, almost $1.9 billion in free cash flow over the trailing 12 months. It's only a $14 billion company. So yeah, they're making a lot of cash. And And that's really where, when you have rising uncertainty like we do in the current market, with rapidly shifting tariff policy and big changes to fiscal spending, which could have an effect on the overall economy's performance. You have people talking about potential recessions coming in. You want to buy companies that have strong cash flows and that have very reasonable valuations. So that's what Plains offers right now. They're in a secure position asset wise, tons of cash flow, and with oil is trading at a very reasonable price, $69 today. And if they can cash flow with oil at this kind of long term lower price, it's just a good position to be in. And the price action in the stock also looks pretty good. You can see right since the start of 2025, Plains took off and has been trading well since. It's building out this consolidation here, kind of a bull flag. And yeah, I would not be surprised at all to see it break out above this consolidation. I think it's a real buy above $20.40. For my second pick of the day, I'm going to be sharing IHS Holdings. IHS Holdings is one of the largest independent owners and operators and developers of shared telecommunication infrastructure in the world. It's a little bit different. This company is based out of Lagos, Nigeria, and they provide critical tower infrastructure on multiple continents around the world, primarily emerging markets, with a major presence in Africa, Latin America, and the Middle East. So, following my kind of defensive posturing, IHS is, a telecommunications infrastructure company. It's not high growth. It's not particularly new or exciting, but it has a lot of things going for it, which I'm going to get into. We can see it has a Zacks rank 1, strong buy rating. And it too has very good style scores with 3 A's and 1 B across the board. And it too is also near the top of the Zacks industry rank, top 2%, number 4 out of 247. We can see that the stock has gotten hammered over the last 2.5, 3 years, which has created a great opportunity for us. And now that it's down a lot, it also happens to have had some really nice earnings revisions higher, some earnings upgrades. There's only one analyst that covers it. There's not a whole lot of analysts that cover stocks out of Nigeria, but this analyst has raised earnings estimates pretty significantly. Current quarter earnings estimates over the last month have increased by 21.5%. Next quarter's earnings are up by nearly 30%. This year's earnings are up by 31%. And next year's are up by 50%. We can also see that the company has flipped its earnings materially positive after being deeply in the red for the last few years, which explains the poor stock performance. And it's an exciting development for the company. They are trading at a cheap valuation now that the earnings have turned positive, just 7.3 times forward earnings. And yeah, it's a defensive name, it's infrastructure, and it has multiple things going for it. And following the free cash flow thing that we looked at in the other one, IHS also has very nice free cash flow. So almost $500 million in free cash flow. And this is a company that's just over $1 billion, or almost a $2 billion market cap. So it's trading at a pretty low free cash flow multiple. And yeah, it's got a really compelling technical chart setup as well. So we can see the company, right? The stock has gotten killed, down some 90% from time it was public to its lows in 2024, and started to build out this consolidation over the last better part of a year. And after reporting those really strong earnings, it broke out of this consolidation really aggressively. So moved up from $4 to $5.50 in just a few days. And yeah, now it's taking a little break. We can see it opened up really strong this morning, but is giving some back. But still positive on the day. This is I would be really watching for a continuation setup. I would not be surprised to see this sort of, consolidate over the next day or week or two. Maybe, build out a little flag here and, prepare for another jolt higher. A stock like this with a low valuation, it's got earnings upgrades, and, it's gonna get on the radar of momentum traders and maybe even some small institutional investors, because it's fundamentally in a good position. Yeah, so that's IHS Holding. That's it for today. If you enjoyed this video, please like and subscribe. And if you want more content from Zacks, I highly recommend signing up for the current promo at zacks.com/promo. Thanks for watching. Have a good day.